Digital lending increases the speed of the business.
KYC formation has to move little faster in terms of doing through video KYC, etc. through the AI model.
You want your AI to do the job of a particular human being, but I think it'll take time.
One of the biggest challenges that a customer faces is their inability to understand that if they don't pay the loan, what will happen.
I welcome all of you guys. I know after lunch session है थोड़ी सी नींद भी आ सकती है, but I'll try to make it as interactive as possible. So I have my fellow panelist, जहाँ पे आपको एक एक्सपीरियंस का बहुत बड़ा मिक्स दिखेगा, जहाँ पे हमारे साथ विनोद है जो कि श्रीराम ट्रांसपोर्ट फाइनेंस जो एक मेहमत NBFC है जो सालों तक एक फिजिकल बिजनेस रन कर रही थी, उसके बाद अब डिजिटल साइड पे गई है. दे हैव सीन अ ह्यूज ट्रांसफॉर्मेशन फिजिकल टू डिजिटल. Then we have Ashok ji, then we have Ranjit who are running their digital businesses. We have Brajesh who has built multiple businesses and sold off few of these businesses and building a next venture on the lending side. And then we have Raveesh. I never imagined that I'll be having a panelist from Facebook whom I will be talking about the digital lending. So frankly speaking, I have a good mix of panelists today, and I will try that whatever topic is given to us, we take best out of it. The discussion will be English because I believe when I speak Hindi and English mix, I am at the best of my knowledge level. अगर किसी को problem होता है तो आप बता दीजिएगा. We will switch to 100% English. So my first question will start with Vinod only because you are sitting the next to me. Vinod, I have worked with few people in treasury of Shriram Transport Finance between 2008 to 11, and I know the kind of businesses you were running at that point in time, and it was so fascinating that so much of physical infrastructure, आपका credit underwriting का बंदा ट्रक के एक स्पेयर पार्ट को अच्छे से समझता है. टायर अगर इतना किलोमीटर चल चुका है, इतने साल पुराना है, तो उसका सेकंड हैंड में कितना वैल्यू आ सकता है, वहाँ तक की नॉलेज उनको होती थी. Now you guys are switching to digital lending, and you are one of the main guy who is converting that, being the chief digital officer. So what is that journey and how you guys are converting customer onboarding KYC into digital way?
Thank you for inviting me here. Yes, I think you're right. We are at the precipice of that innovation, right, where we are moving from physical to digital. But I think we are somewhere in the middle. We are currently phygital. I don't think we will ever become completely digital, but the reason being the kind of businesses that we are in, the kind of my TAM, my customer is very different from the usual customers who are currently being offered lending propositions. My customer is based out of rural markets, typically tier 2, 3 and upwards, and they don't fall into the regular credit framework. They are not, the banks don't find them credit worthy because they don't have past data to assess these customers. And that is where we come in. We are very different. We have feet on street. We have alternate methods of assessing the customers, and we've been doing it for ages. And I think you are bang on at that point where we don't, gauge or assess the customer basis his past repayment track, but it is more on the alternate, methods on how the residence, on what kind of vehicle, the operating economics between on the vehicle, and similarly on the retail side as well in the same format. So we are at that point where we are trying to make, my front end field staff, I'm trying to enable him to lend the customer better, faster, efficient, but not trying to take away anything that he was anyways doing. So
right. So are you saying that the way physical business was running, after adding the digital flavor, it became effective?
It has to, no? So right now, if something was taking longer, it will take shorter.
So is it like only increment of the speed or also the efficiencies?
Definitely efficient. That's what I'm saying. I'm trying to empower my executive to lend better. In simpler terms, I am moving from a rule-based to a data-driven approach. So rather than having, my earlier rule set, I'll probably back him with more data so that he can assess him better and lend better.
सो यू सेड रूल बेस्ड लैंडिंग, तो मैं आता हूँ आपके पास वापस एआई एल्गोरिदम की जब हम बात करेंगे. सो अशोक जी, फॉर यू, बिकॉज यू हैव बीन ऑपरेटिंग अक्रॉस द asset segments, right? Few of the product I work with you, you guys were also into electric vehicle lending.
Yes.
Now couple of other products you are operating.
Yes.
So across all these product segments, how has been your experience onboarding this customer via digital KYC norms? So are we able to do it the way regulator is asking for? Are all the current digital solutions are enough to do digital KYC check of the customer via video KYC or any other alternate methods?
Very good point. In fact, as a matter of fact, we have seen two journeys. One is completely physical journey where we were into small areas, locations, smaller towns where the entire KYC process was done physically, and someone is doing original scene and verify, putting signature, etc. But now we are also doing some kind of business where the complete journey is digitally done. And as a matter of fact, lenders are highly regulated in terms of RBI guidelines. So what we are seeing that maybe as a Billmart, as a fintech has moved far ahead of what regulator looks at. If we have to do KYC, whether we do through CKYC model, through eKYC model, or we do VKYC, right? Now, mostly NBFCs and banks will prefer that it is done through VKYC, video KYC. We have also model where the VKYC can be done through AI agent instead of an individual person sitting it. But I have some doubts whether RBI will accept it, because regulatory, maybe the fintechs are moving far faster and ahead in terms of doing things, doing innovations, but maybe they get restricted to certain stages in terms of doing things as far as the regulation is concerned. So I guess KYC formation has to move little faster in terms of doing through video KYC, etc., through the AI model, so that it is faster, more efficient, more accurate, and especially when we expect the customer onboarding has to happen 24/7, right? We also do some business for gig workers. Now for all those people, their education level is little low. So their understanding of using technology, etc., is low. So we have to make it very, very smooth, seamless for those people. Hence, use of technology is very, very important and effective for those people.
So do you think that whatever agentic AI we are talking about today, soon those agentic co-workers will take place of the agent who are doing the video KYC today? I understand there is a regulatory concern or they may not accept it. But are you working on any such experimentation, या तो आप near future में अगले 6 महीने में ऐसा कुछ plan कर रहे हैं?
Yes, of course, because now what is happening, I will tell you, one more product which we have done is with some of the state governments, and they want their employees to be given loans. And they also want this facility to be available 24/7, all working days, all the time. Now, if I have to onboard a customer at any point of time, that effectively means I will have to have manpower available, not only manpower, but also the infrastructure available for those people on 24/7 into 365 basis, which is very difficult humanly, because your chances of error are high. So what we are doing is we are working to enhance this entire experience for the user, where they can come at any point of time, not depending on any individual sitting there or not sitting there, or any human error being there. The complete thing can be done through AI. One. Two, not only KYC, but the entire underwriting also can happen automated, because your data points are limited, right? And maybe you are not really looking for basic data, which we have been always talking historically. I want bank statement, GST, I want your appointment letter, offer letter, ID card, etc. Because the counterpart is giving you data in digital format, right? So if I'm dealing with any large corporate, we deal with the gig workers platforms. So they already have done their KYC, they have entire data with them, they have their earning data with them. So we take that data and basis that we want to do it. Hence it is highly recommended that we completely maybe replace in a way for this particular segment any kind of human intervention, including onboarding KYC or BRE being run for the underwriting process, or agreement signing and the disbursement. So the entire process can be digital without any human intervention, unless except certain points wherever there is a regulatory requirement of any interaction being happening.
So Raveesh, I have a question basis on what Vinod and Ashok ji said. So fintech may say that okay, we are doing good and we have sorted the KYC part, customers are happy and all. But I interact with a lot of my customers and I know 50% of the customers always feel कि अरे ये better हो सकता था, ऐसा हो सकता था. And you are coming from the company which is very much focused on the user experience, whether we talk about Facebook as a platform, Instagram as a platform, or WhatsApp as a platform. So do you feel the customer which are being sourced through, let's say, your platforms or being interacted, especially with the onboarding journey and KYC journey, they feel that, okay, the journeys are good enough, the experience is good?
See, the customer will never say that the journey is ever good enough. I think in the financial services space, the journeys have been never so complex, but I think we are in a very, very interesting phase. I think 2026 is maybe we'll all remember this, 25 and 26 is going to be the year where we'll redefine the entire experiences, right? From an overall onboarding experience, what used to be a rule-based journey or let's say process where you had to first enter your Aadhaar, UIDA, you would do the ping, then for example, maybe somebody will check for either your professional accomplishment or your personal sort of an income. But all of that now can be done in a disaggregated manner. And now we have seen the proof. In fact, something that I was trying to do at my last, I used to lead a bank before this stint in digital practice in the bank. And over there, we were trying to disaggregate the onboarding journey. But tab hamare paas, we didn't have the tools back then. But right now, for example, you can just make it a very conversational journey, understand the requirement for the customer, ask it in a conversational sort of a manner, and then now the entire agentic flow, whether it is even on our platform, like a WhatsApp, you can define it, or for example, people can do it on their own web sort of a surface or app surface. You can actually completely re-orchestrate the journey. Basis the requirement, you can say, okay, now give me this. Okay, you don't have this particular document. These are the 5 alternates. So earlier, when we used to look at, let's say, lending journey, 100 customers would come into the funnel. Maybe 60 to 70% of them would drop off because of, let's say, risk-based assessment, which is fine. But 30 to 35% out of that, only 4 to 5 people would end up completing the journey. The 30 people would drop off because of the journey-based inefficiencies. Now, you as a lender will have the advantage if you can design intelligent journeys to ensure that these 30 people are also going through. I think that's the era we are in, and we'll see a lot of efficiency from a process point of view. And that's what, at least even as a company, we are trying to ensure that our surface, which is WhatsApp surface, which is one of the most beloved conversational flow surface, can enable this for every company in India.
So I have used your one of the Llama version, and I tried it for some different use case. But do you think that the LLMs which are now coming up, those will make the customer journey building completely seamless for the companies also? So one is the user side, another is the company side. So let's say today if I want to change a flow on my mobile application, it takes few days time period. How soon you see that basis on the customer experience, the app itself thinks that, okay, I need to tweak this flow and I change it. So how quickly you see, even if it is like imaginary number?
So it's not an imaginary number. I think now, for example, people are doing it. I'll just maybe state an example from one of the players that I know built it on a LLM, and this was not a mobile app because mobile app still has some rules, but this was a website. So let's say website earlier, 3-4 years back, would take typically in a banking setup where you have to ensure that regulatory norms are maintained, there are disclosures, etc., would take on a normal 9 to 12 months, a full website revamp. Still we see in India, not every bank would have done it. Okay, guess the time frame that it takes to completely change the code base, put it into a new code base, something which gels well with an LLM. How much would be the time? And there are banks which have done it now.
Maybe couple of weeks.
Yeah, exactly. It takes couple of weeks and 2 weeks to actually do the entire thing, and 1 week to ensure that automated testing is also done, and 3 weeks, banks like NatWest and all have gone live, Westpac, etc., have actually done the entire revamp of their websites. So I think that's the change, right? From almost a year to less than a month.
Right. So just for audience, if any startup founders are sitting or you are thinking about the next business idea, potentially these are the area worth exploring. एक जो agentic KYC related flow है, it's something which is going to be massive. I am strong believer of that, and that is where the world is heading. And second is the way new age websites are being created, especially with the financial services. Earlier, we all used to believe that financial services websites are the most complex things, but that narrative will change the way agentic AI is coming in. Ranjit, my next question comes after hearing all the views from our three panelists, that when such kind of flow changes, so for years, we lenders used to believe that if customer comes after giving input like this, he belongs to some category. If customer comes from this type of flow, it belongs to another category. Slowly, gradually, that moved from rule-based to ML-based, and now from ML-based to it's moving to complete AI-based architecture, right? So how do you see the AI-based underwriting moving into next 5 years time period? And do you think that it will not just be a faster thing? So let's say technology definitely makes it faster, but AI and such new approaches will make it more disciplined, less risk prone, and better and efficient?
Yeah. So I think, look, specifically when you talk about underwriting, loan underwriting and overall the risk aspect, and I will relate to the asset class that I engage with, which is commercial lending, right? So lending to small to mid-sized companies. The fact is that, you know, underwriting and risk is where digitization would die, because that is the most, I would say, qualitative and subjective part, where calls have to be taken based on a large number of factors. What we have now, which is the current generation of technology, namely AI, ML, and the kind of agentic AI, etc. These technologies promise to change that, because for the first time, we have the possibility that we can digitize what is essentially a qualitative decision-making process. And so this is a completely new set of opportunities that have arisen. One is, as to your question, are we simply going to do what we do currently in a faster manner? Yes, of course, that's the opportunity. But more than that, there's the opportunity to do a lot of different things which we did not dare to do. As a risk leader, for example, I have to continuously decide whether, you know, we should invest in doing a certain kind of analysis or looking at the portfolio in a certain way, depending, and compare it to what are the kind of analytical resources or the processing resources that I have at my disposal, right? If there's something, you know, which will take 2 months to finish because I have to put 2 people behind it and, you know, interpret vast amounts of data, and they'll probably spend about, you know, a month just finding and cleaning the data, right? Then it's probably not worth it, and, you know, I'll probably find some other way. The opportunity here is to actually now, if you play it right, and you build in these kind of tools, and you have got the data backbone in place, then you can actually look at doing a whole host of activities and underwriting in a manner which wasn't practical earlier, right? So I think, so it's not just the fact that, you know, what your existing process is something that will get digitized. It will become faster. It will become a lot more thorough and standardized, which is the problem whenever you have you have a subjective decision making, right? Standardization is very hard. But here you have the opportunity to standardize, work alongside your analyst to give them a much faster and a much more thorough and a standardized platform for decision making, and also move to underwriting in a manner which was not possible earlier, simply because the amount of data and the amount of processing power at your command is much more. And this would in turn also enable you to address a certain kind of customer, right? Which earlier you would not step into, right? Because, you know, the complexity and the subjectivity of the loan process or the journey of underwriting, where you do a lot of to and fro with that customer, right? somewhere during that it gets so complex that the customer falls off, or you yourself decide to not do the deal because you know that you find that the complexity is too much and it's just taking far too much time and fatigue sets in.
Right.
So I think that is what I really find exciting about the current opportunity.
Right.
That is a part of the market that we can start looking at addressing if we are able to build this AI-based backbone the way it needs to be done.
So Brajesh, when the credit guy is very positive and looking at the opportunity, I want to throw you a little bit cautious approach question. Ki when we are able to underwrite customer in a better way with all these new age models, do you see that customer can also create more fake identities and somewhere make the model guess it in a wrong way that I am a good customer? So you as a CEO, are you worried about such kind of risky proposition, or how do you see that shaping up?
I think that's a very pertinent question, and we have seen deepfakes, and the industry is grappling the challenges with. So we are no different business, but luckily we cushion ourselves by underwriting, I will say pseudo underwriting at an institutional level first, being in an education finance business. So we first see what is the level of institution, what is the pedigree, how many years they've been into this business for, and the courses what students are basically applying for. So that is the first level of our underwriting criteria, then straight. But coming back to the deepfake IDs, that yes, certainly there is a challenge. And that's where I think, whether in India or in overseas, especially in India, the digital approach will always take a center plate. That while you want your AI to do the job of a particular human being, but I think it'll take time. And especially when you're just relying only on the data supplied by the customers, and you do not have the validations in place. So that's where I think those challenges will grapple. But I think we have seen in the last at least a decade or so, the technology has added a lot of speed, which has added to a scale as well as the inclusivity. But having said that, all that wisdom of a typical underwriter brain, when he can physically meet the customers, feel the paper on the ground, which is not the case in a digital lending. So that's where I think your AI and ML model has to, and the validation model, especially with regards to the KYC and the VKYC, I think answers quite a bit onto that. When you're actually interacting with the customer, if not physically, at least on the video form, it kind of mitigates that risk to a large extent. But yes, certainly if you're just relying on the data or the documents supplied by the customers without having a validation in place, you run a risk of having a deepfake situations.
Got it. So that leads to the next point, that when we disburse a loan, there could be, it could have been a mistake. So either it was a fraud customer or probably a stress customer, or potentially a customer was good, but now the customer is under stress and the EMI is being delayed. अब EMI delay हो गया तो collect तो हमें करना पड़ेगा. So I have been seeing that in last 4-5 years there is a lot of automation has come up on the collection technology side. So Raveesh, is WhatsApp or any of your platform can be helpful, or you guys are envisaging your role to add value to fintech clients in terms of collection side by providing any kind of data insight or providing better interface to make better communication with customers?
Again, few of our partners have already enabled this. So this is something that is live now in interfaces, where one of the biggest challenges that a customer faces is their inability to understand that if they don't pay the loan, what will happen, right? I think wo बहुत ही difficult, that process is difficult still. Some customers are not able to understand it. So I think some of the very, very large banks and fintechs have started this process to first of all educate them. When, let's say, at the process when DPD तक हम पहुँचे नहीं, but like soft period में where we know that this might fall off, regular education की what is why, paying on time is important, right? From a credit history perspective, right? Number two is, let's say, one, you start hitting that period, right? Then again, making people understand the entire ability that what is falling off, right? Credit score कैसे impact हो रहा है, the entire ability, right? And then once you have crossed that phase, right? Ensuring that you can also do renegotiation. Because see, it's important, first of all, to maybe we might take a hit, but let's say for the customer to also understand that, this is an important amount, and agar, if they can pay this much, and, maybe we can delay the next payment by a certain period. So it's important to figure out how much of amount can be paid at that particular point in time, and what can be the next steps, right? Whether it is delayed sort of a payment, because, people might lose their asset, people might ending up to a debt trap. I think to avoid that, a conversational sort of a platform is right up there to just ensure that this is done in a non-intrusive manner, because sometimes collections can be hard. So I think all of this is very much happening right now. We are already in a world that this is happening. It's just that how many companies, right? Companies sitting over here, NBFC sitting over here. I think how do we get onto that particular model faster? I think that's the whole benefit that we can provide to the consumer.
So, Vinod, that creates a question mark that when you are driving the digital changes in your organization, are you guys are actively using, let's say, data point from such social media, or what kind of technological changes you are bringing on the collection side? So, if you can share any one major change you have done in last 12 months, which is coming like this.
So what we are attempting to do is to build a early warning signal. So basically creating cohorts of customers, creating customer personas on past data, and figuring out if what are the propensity of a customer to,
Propensity of pay.
propensity to bounce, a propensity to clear, what quantum, at what date, what is comfortable to. See, this is only solving one part of the problem, which is identifying the customer cohort. But what has actually worked out well is to stitch the response of this into the communication channel that we have. So like how my co-panelists just mentioned, how do I communicate it to the customer, and should I switch an instrument instead of, should I redo an ad, should I switch the instrument to a UPI, what is more comfortable, is 5th the right date for this customer, or 5th is not the right date for this customer, or what quantum is comfortable at this point in time, should I look at restructuring as an option. So this is the output that I want to create. So this EWS is stitched to the communication, so that then which communication channel reaches out to the customer faster. Is it an SMS? Is it a WhatsApp? At what time? At what date? What is the visibility that I'm getting of the customer is more important. That is actually turning out better than just understanding the customer cohort. So see, I keep saying this, we are not in the business of lending, we are actually in the business of risk. So unless I get this collection sorted, there is no point of solving anything upfront. While we've been discussing onboarding and underwriting, this is the only feature which is actually translated into progressively looking at, this opens up a lot of avenues for me to lend also.
Got it. So if I sum up whatever views you guys expressed, what I foresee is, so far in a layman's term, people only understand that digital lending increases the speed of the business. But if you ask me, or if you ask the panel, our belief is that it's not just increasing the speed, but it's creating a new kind of effectiveness in the lending ecosystem. So अगर हम इंडिया के टर्म्स में देखें तो इंडिया जब $1 ट्रिलियन की इकोनॉमी था और अब $4 ट्रिलियन की इकोनॉमी बन रही है, तो 1 से 4 की बीच जर्नी जो थी वो डिफरेंट वे में हुई. उस टाइम में डिजिटल लैंडिंग का इवोल्यूशन हुआ, एंड नाउ देर इज़ अ साइजेबल चंक ऑफ द लोन बीइंग डिसबर्स थ्रू द डिजिटल जर्नी. Now the expertise which we all are bringing on the platform will decide how the journey from 4 trillion to 15 trillion in next 10 to 15 years will happen. So it is very essential to understand for each and every one that digital lending is not just about the speed, but it's also about bringing efficiency as well as a new way. अगर हम उसी तरीके से होम लोन को अंडरराइट करते रहे जो आज से 10 साल पहले हो रहा था, जहाँ पे एक बंदा घर जाएगा, 10 बाजू वालों से बात करेगा, फिर फ़ोटो खींचेगा, वगैरह वगैरह करेगा, वो स्पीड से इकोनॉमी आगे ग्रो नहीं हो सकती. तो डिजिटल लैंडिंग बिकम्स वन ऑफ द वेरी वेरी इंपॉर्टेंट टूल of India's next jump from 4 trillion to 15 trillion economy size. So guys, what you think that what will be the future of credit, if you guys can just share a couple of sentences each and just sum up what is your view about the future of credit in India in 2-3 sentences.
So if I have to begin, I want to say 2 lines about this collection thing also. Everybody actually focused a lot more on customer onboarding and getting the client onboarded. The idea was I will get data, I will get leads, if nothing else, right? I think collection may, while we're talking about automation, we're talking about AI, etc. But I have also seen something which lenders need to, all of us need to take care of is too much of communication happening. So we proudly say, okay, I will send a message to the customer 5 days before, 3 days before, 2 days before, 1 day before, on the day of EMI, I will send SMS and email and WhatsApp and call, right? That becomes too much of communication many a times. And in that whole process, sometimes we irritate the good customer, which is almost around 90% of your customer base, right? Just to focus on that 10% who is perhaps not very prompt in terms of making payment. Hence, it is very important what, in fact, Vinod has mentioned, that the communication has to go to only those people who need that kind of a communication, which effectively means you have to analyze that somebody who is regularly paying, you don't need to send him too many message or communication for the due date being happening, right? And your communication has to be higher to those customers who are either delaying or defaulting, or maybe possible chances of those people delaying or defaulting.
So Ashokji, we are running out of time. Last 30 seconds to
minutes,
conclude
okay.
the future.
So I think this entire underwriting model with the question which you asked is going to change drastically, because the traditional method of underwriting will not be there anymore. People will look at a lot of alternate data, including for business loan, MSME loans, corporate loans, etc., and try to do a lot more automation to bring more efficiency in the system.
Sure.
So basically, if I may sum it up, last decade we have seen, the ecosystem has undergone we have optimized the speed. But I think the next decade will be adding an intelligence layer to it so that it becomes sustainable. End of the day, as Vinodji rightly said, we are into a business of risk and the money has to come back with the interest. So next decade, what I see, adding of a lot of intelligence. So gone are the days basically when we are judging the historical data. So we are moving from judgment of historical data to the real-time monitoring of the portfolios and the data. So digitization has made the lending faster, and I think intelligence will make it safer.
Amazing. Ranjit?
Yeah, I think, if we were to look out a few years down the line, I think one should look at not just what we're talking about today, which is AI, ML-based lending, credit underwriting, etc., but also look at what has been accomplished over the last 3-4 years, which is what we loosely call the India stack, which means that for individuals as well as for corporations, there's a vast amount of transactional data that's available, right? And what the technology that we are talking about today and hoping to leverage is going to help us unleash the power of this India stack and this data. And the result, I think, would be, a much more transparent picture of corporations and individuals to lending institutions, a much more, and as a result, a lot of discrimination in terms of what constitutes good quality buyers and not so good quality buyers, and therefore the pricing discrimination will come in. And of course, it goes without saying that one expects that the speed of lending or the speed of decision making would increase significantly. But also with discrimination would also come a widening of the credit base. There will be always a bunch of individuals or corporations who you are currently not lending to or not considering, but you know how to price that risk because you can see their data and they will be able to find credit as well. So I think a widening of the credit base and greater discrimination and transparency in credit decision making is something that should happen.
Got it. Raveesh?
So maybe 4 specific things. I think from a new customer's perspective, widening that base as, specifically from the India to the Bharat, I think that is critical. Getting to the urban poor, getting to the rural, I think that's one. Number 2 is disaggregated, agentic, conversational-based onboarding. I think we are in the era, a couple of fintechs have already shown the way. I think some of you might have caught those videos online. I think number 3 is ensuring that we build underwriting with alternate data as well as social behavior. I think that's something that is right now ripe. And number 4, finally, intelligent collections journey, where you are reaching out to the customer in a non-intrusive manner on the channel which they prefer, right? Not on a, so I think that's the 4 piece of answer.
Amazing. Vinod.
I think 3 words. One, it is going to be inclusive. Lending is going to be embedded. And lending is going to be hyper-personalized. 3 things are going to drive the future.
Amazing words, guys, and very nice conclusion. Adding my point of view, guys. So the way India is growing the digital lending ecosystem, India has a very, very spatial timing. So in lot of time, investors talk about timing in the business. हम तो सब startup founders हैं, तो कई बार ये चीज़ें ज़्यादा सुनते हैं, but timing बहुत important होता है. If we look at the digital lending or the lending ecosystem play across the globe, India is at the cusp, जहाँ पे $4 trillion से हम 15 trillion की जर्नी पे जा रहे हैं, जहाँ पे household debt as well as individual debt is going to grow in a very big way. However, the other countries have already grown to the level, but we are yet to grow, and we have already entered into the era of agentic AI and the other AI ecosystem. If we build this system effectively, potentially India can become one of those rare country जिसके पास ऐसे solutions है जो पूरे world के ऊपर लेके हम जा सकते हैं जो digital lending में बने हुए हैं. So I believe all the digital lenders in India is putting all the efforts to build for India, but in next 5 years time, I very strongly feel that we will witness a journey of Indian fintech companies which will not just build for India, but also build for the whole world. So thank you very much, my panelists. Please have a round of applause for all of them for coming here and sharing this view.
I request our moderator, Mr. Bhavin Patel, to kindly felicitate our panelists by presenting them mementos. Mr. Vinod Kumar, Chief Digital Officer, Shriram Finance Limited. Let's hear a big round of applause for him. Mr. Ashok Mittal, Managing Director and CEO at Billmart Fintech. Mr. Ranjit Singh, Chief Credit Risk Officer at CredAble. Big round of applause. Mr. Brajesh Pranami, Founder and CEO, Flyhi Finance. Mr. Raveesh Bhatnagar, Industry Manager, Financial Services, Real Estate and Travel at Meta. And may I request Ms. Charanjit Kaur from Exhibitions India Group to kindly felicitate our moderator, Mr. Bhavin Patel, CEO and co-founder at LenDenClub. Let's hear a big round of applause once again for all our speakers.